Hello, this is Mark Sturdy with 7 Days Ahead's highlights of 7 Days Ahead's technical strategies, week of the 27th of September 2022. If we look at the summary, we'll see that there are interesting things happening in the dollar-euro still, the long, exciting strengthening of the dollar against most currencies, but in particular the euro and the yen. We are also interested in the Euro Stoxx 50, and the US Treasury note. The Euro Stoxx 50 we think is bearish in all time frames, and the US Treasury note is bullish in yield terms, bearish in price terms across the board. And we're excited by gold. Let's just quickly go through some of these more hot markets. The dollar euro is in the middle of a major breakdown. The euro breaking down against the strengthening dollar. This has began some while ago, and we think it's got some way to go. We see no likelihood of this ending until the market gets down to about this level. Let's have a look at more. Here's the well-established trend, recently accelerated. Here's the detail of that trend, very well structured bear market whereby prior lows acting as good resistance on any attempt to retrace. This is the recent breakdown. So we think the dollar continues to strengthen against the euro dramatically. The dollar yen is a similar story. I won't go through that. It's similarly poor for the yen and strong for the dollar. There's been talk about dollar sterling. I'll quickly go to that. I think we are standing back, there having been an enormously fast weakening of sterling against the dollar. It's now reached a level which I think the market should look at carefully. Not a sell level for sterling at this level. It's at certainly it's low, at the level of last seen in the 80s, but that we think this might be a natural level to pause. We'll see. So I would stand back from dollar sterling this morning. Going back to the next interesting market, we think the clearest market is the Euro Stoxx 50. Let's quickly look at what's going on there. It's another breakdown. The general comment on the stock markets is that the bearishness has returned. The market in the US is pausing at significant levels. Let's just quickly look at that. It's pausing at this prior low. Having rallied throughout the summer, it's collapsed quite quickly. We'd want to wait and see how the market can deal with this. But in fact, the Euro Stoxx 50 is already broken through its prior low, showing greater weakness. This may be some pause, and we might want to wait for the end of the week to be, but the end of last week was a breakdown, so we are bearish of that. The other exciting markets to look at, we think that the US Treasury note is rising yields and to go further, and that looks like a well-established bull trend in yield, bear trend in prices, breaking down through prior highs, breaking up through prior highs. We think that's going to go on. We don't quite think the same for the German Bund and gilt. Let's quickly look at that. We think they've reached levels which have historically been very good resistance to higher yield. That's the Bund and the gilt. Similarly, big resistance. The market failed here. So there may be a pause in the very rapid rise in yields in Europe, less likelihood of a pause in the US. Our last point of reference, which we think is exciting, is the gold. This is likely to be, this is the monthly chart, a big bear double top. It's not the end of the month yet, I grant you, it's 26th, but it's likely there's a breakdown in the month and in the week. The week's already broken down. End of last week, it broke down through beneath this prior low. So the week chart has already broken down, confirmed. The confirmation in the month would establish a very bearish situation, suggesting moves down to 14, the high 1300s at the least. And that is it for us. Here's the more gold charts breaking down on the week chart of the December contract, and the daily detail once again a breakdown. Thanks very much.